people are suffering, bro. There's hunger in the land. People are hungry. People don't feel it. Should you really give the government credit then? If policy reforms does not transmit to real life improvement.
Yes, Nigeria is looking much more attractive from an investment perspective, given everything that we're seeing right now. I think there's been some level of improvements in security. Second, I would say inflation. We're seeing what the data is saying. Then I also see the exchange rate as well. And we are seeing, where things are going. Yes, it's looking good. It might not be where we want to be, as a country and as a people.
It's as if there's a logjam in the transmission mechanism between, policies at the macro level and how Nigerians are feeling it.
So I would say we've gone through the most painful side of things, to be honest. I don't think that we're going to feel that much pain again as a country that based on no. I honestly don't think so. If we continue on this path, if someone had told me that we'll be buying PMS at maybe 800, 700, 900, right, and that there'll still be cars on the road today, I'm sure you will say it's not possible. I think it's a journey. We'll get there.
What's the link between rental price increases and the economy?
It's just pure market. It's demand and supply.
No, and
that's it. So
beyond that, there's also the concept of replacement costs.
Location is not necessarily street or area.
What is
Location
it?
is where people stay. So I want to stay where Gbenga and Arnold stay, around their area. So if where Gbenga and Arnold stay is flooded, I don't care, because that's where Gbenga and Arnold stay. And so based on our demographic, the rent is always going to be high. That's what's happening. Hello everyone, welcome to Drinks and Mics, brought to you by Nairametrics. My name is Ugo Dre, and if you're just watching this for the first time, where have you been? Because we do this every Friday, 6 p.m. Live on our YouTube channel, Nairametrics TV. Just go there, 6 p.m. Turn on your notification and subscribe. You'd always know when we do post the show on our channel. And then, of course, you can watch it all through the week and take your time to watch it. Because when you're doing that, just watch it like Arnold, with a nice glass of whatever it is that you drink, All right, so I've got the gang here with me. Of course, I've got Arnold Dublin Green to my left.
Hi, everyone.
And that man is somewhere, where did he say he went to again?
Saudi Arabia. He went to get some Arab money.
Oh, so he went to get some Arab money. Yeah, so he's not around today. Tunji Andrews is off today. He's going to be back next week, of course. So you guys, don't worry. He's going to be back with some Saudi gist.
Yeah.
And of course, we have with us here big boy in the house.
Very, very big boy.
I honestly don't know what to go say.
Very big boy.
We have a very big boy in the house. Please shout out to Gbenga Sholotan.
Hey.
Gbenga,
Welcome.
Tell our viewers what you do.
Okay. Firstly, I'll say it's nice being here, right? Thank you. I've known this gang for ages, right?
Yeah, very long.
But obviously, this is my first time here. So it's good to be here. Well, I currently work at African Finance Corporation. I manage special assets. That's what I do at AFC. So I think in summary, that's what I do. But obviously, prior to that, I've been doing research all my life, right? RMB, Standard Bank, MBN. So sound guy. It's amazing having
the right person in the house.
Being able to drag Gbenga here today.
Thank you.
A huge one. And we're going to be talking a lot about the Nigerian economy today, the real sector that is. So we're going to be delving into that. Arnold has also been doing some research, so we're going to be looking at that as well today. But we will start first with global macros. Fed is meeting this week, isn't it?
Fed meets this week. Yes.
Is it this week or next week? I'm seeing
this week.
16. I'm seeing 18. This week.
It's this week. Yeah.
So I think a lot of the consensus out there is that he's not going to be too late. He's too late already.
too late power, right?
Yeah. He's too late already, according to Trump. So, but are we seeing rate cuts? Let me start with you, Arnold. Are we seeing rate cuts?
Yeah, we are. I think it's. I didn't think we would see rate cuts at the beginning of this year, because I see that the US hasn't really beating inflation. And also there was a lot of confusion, and we still are confused on the impacts of tariffs or all these import tariffs. But it looks like, I don't know how to put it. It looks like in the US, the monetary policy and fiscal policy are both now politicized. Right, so it feels like a Trump influence because Trump is a big business guy.
Yeah.
He wants rates to go down. Mortgages are suffering. Credit card payments are suffering. Businesses are suffering because rates are too high. So there's a lot of pressure from politics, from big business Trump to get power to cut rates. So I think we see a rate cut. The question is, how much of a rate cut is what we don't know. Whether it's a 25 basis point cut or 50 basis point cut, but we see something.
So I'm saying between 25 and 50. Gbenga, what do you think? Do you foresee rate cuts as well?
Yes, I totally agree with Arnold. I think most analysts expected 25 basis cut, but obviously within 25 to 50 bips, and that's in the short term, really. But over now to maybe mid-2026, we could probably see combination of maybe 75 to 100 bips cuts.
Really?
Right. Yes. Because if you look at the data speaks to that as well. And like Trump has always said, too late, Powell. I won't say I won't say it's late, but I'll just say that it's like watching the data and moving at the right time. What seems to be the right time for him to move. So I expect to see a rate cut.
But I tell you what, selfishly, I would like. I know the consensus is at 25 basis points cuts. I think it's a 92% consensus is 25.
Yeah.
About 7% or so is 50. I want 50. Right, because this is from a selfish perspective.
Oh, of course,
and
as Africans, we
know
want 100.
Exactly.
We're going to get to what this means for Africa,
Yeah.
though. But just still on this rate cut, it's I don't want to call him too late Powell because his name is Powell, man. You guys are like giving credence.
No, it's not me. It's something that's out
to this
there,
name
right?
calling.
Because we also need to respect the independence of the Fed.
Exactly. That's my point.
Exactly.
So now talking about independence of the Fed. So is the Fed's expectation that they will cut rate more about the pressure that Trump is giving, or is this still the economics? Is this still, is the data? Because Powell has always said it's the data. So is it still the data?
Yes, it's still the data, really. But if not, this would have been done. Immediately the pressure started coming from Trump.
So do you think the data actually calls for it to come in now?
Yes.
Because in my view, I don't think
the unemployment rate is stagnating.
So the thing is, I feel like it is. At first, inflation was a target, right? Then all of a sudden went to labor. And when it goes to labor, then it definitely becomes an issue. At the beginning of the show, we talked about the US going to stagflation is because I always saw that there was going to be a stagnant, or growth was going to be stagnant in the US and inflation was going to be an issue. And rates, Powell has always used inflation as a reason to keep rates. But then when the pressure started, the rhetoric changed to labor. Right. So now labor is what everyone's using. And that's why I think that monetary policy has become politicized. This is Powell, for lack of a better word, capitulating. Caving into Trump.
You don't think so?
I honestly don't think so, right?
Okay.
To be honest with you.
No.
I still maintain that, it's the data, right?
Yeah.
Labor data is a very important one for the US, right? So is inflation. So inflation hasn't really been on the rise, right? It's been somehow, stable or been moderated, right?
Moderated more like.
Exactly, yeah. So it's the right time, right? The economy also needs to grow, right? Things need to start moving, right? Yeah. And I say selfishly, right, as an African, I want to see that rate come.
I don't want to get there. But let me ask this, Gbenga. So is it too late?
No, it's never too late, to be honest, right? Again, like I said, I think from the African perspective, doing business
should he have
Africa,
cut rate earlier then? I mean, if we're talking about the Fed's independence and all that, so should he have probably cut rate earlier than now?
Well, so I'll be selfish, right?
Yes.
I'll have asked for a rate cut way earlier, to be honest. Right?
Yeah.
And I've always been looking forward to a rate cut. So rate cut is good for business, it's good for Africa. And
I thought he was afraid because he didn't want to cut rates because he thought, that could probably trigger inflation spikes. And then he also mentioned trade as well. They didn't know how this so-called tariff wars will sort of pan out and affect inflation. And people are beginning to say that prices are going up. I mean, if you've got family or friends in the US, you see them tell you, well, prices are, kind of like, rising. And if you read some of the things you see online in the media as well, it kind of looks like that.
Yeah.
So, but nevertheless, is it too late? I mean, Did you think maybe Powell?
No, so for me, man. So if in 1995, when America was quite where it is now in terms of growth, there was a rate cut that triggered a nice commodity cycle, commodity boom. And in the words of Gbenga, being an African, commodity cycles are very good for us. Oil, gold, everything goes up, right? So I am superimposing 2025 to 1995 when they had the rate cuts, and then we had this nice commodity cycle, copper, iron ore, Africa boom sort of started around that, and that's what I'm seeing. And we've always talked about Africa and Nigeria being at this inflection point, regardless of our reforms, we're at this inflection point where we're at this turning point, and we're going up, but the reforms are making it quite hard, and we need another catalyst. And I like to think that this is the catalyst that we're waiting for.
What does this mean for Africa, Gbenga? Why is this important to us?
Okay,
Why should we be celebrating the fact that the US Fed wants to cut rates?
Okay, so basically, funding, right? Funding for African business. I think that is very, very key, right? So I remember if you look back to 2020, 2021, the LIBOR rate was like 0 point something, right? Now the SOFR is like 4.5, 5%. So that is a reference rate, not talking about the margin that you add
of course.
So the cost of funding really for African businesses has skyrocketed, right? And
so when you say funding, you mean like dollar funding?
Dollar funding, basically. Yes, exactly. Funding. Yeah, because most of the things we use in Africa, we import the machineries, equipment. We even some services are, so we pay for them in FX, and some of these things are financed, right? So that is a big deal, right? So if the Fed cut, there's a relief for Africa. Then even for governments as well, government financing as well, external borrowings, your debt service is also lower. Exactly. So it's an opportunity. And like Arnold also mentioned, right, the commodity cycle, it's important, right? Again, I think there's something I think people miss a lot when looking at the global economy. I like to track the dollar index. It is very key. Dollar index is like 96 right now, 96 points, right? Average, if it's 100, that's neutral. If it's higher than 100, overvalued. And over the last 1 year, I think it's been below 100, right? So the dollar is weak at this point relative to the currency that it tracks. The G7 currencies. I believe one of them is the pound, right? The yen and everything. So the dollar is weak right now. So cutting rates, obviously, will make the dollar, let's say, weaker. Let's put it that way. But at the same time, it makes us, right, on the flip side, richer in quote, right? So we're able to afford more things, right? That's how you'll see that there'll be an increase in oil price because you spend less local currency to buy oil price, then demand for oil increases, then oil prices go up. The same thing for commodities as well. We're able to afford more. So it's good for Africa as a whole. Then for the businesses specifically, they're able to afford funding. That's businesses that rely on the US dollar funding as well. Exactly. So I guess some projects, right, are currently not, I'll say, bankable. Because when you look at the financials, you run the models and all that, look at the financing cost, right? Like, okay, these guys won't be able to afford to repay this facility. So you pack those projects in the cooler, right? But with a progressive rate cut, right, we'll see the reference rate, go lower. And on the back of that, you can see projects become more viable. And those projects that are not viable solely because of funding, they're back on the table. So there's a lot really that Africa really needs to happen, right? Especially on this Fed rate for us to, to get to where we need to be, really.
Thanks, Gbenga. Arnold, so what does it, because I know like you're salivating because of markets, yours is always how much money you make or you can make from it. So what does this portend to, to markets, by the way? So commodities, equities.
I'm going to start with what everybody knows I'm going to start with. And I said in the last episode,
the G-War.
And I've taken this as the golden child, right? But there is, oh my goodness, I was about to say something really, really bullish. I was going to say there is no better time to invest in gold, but I don't want to say that.
In gold.
I don't want to say that. But commodities, a rate cut to a lower Fed fund rate, a weaker dollar means asset price in dollars rise. Right. Let me start with that. And I'm going to be selfish now and say gold is one of the reasons. Commodity is one of the reasons why. Africa is a commodity producing region, but gold as a gold trade. If I start with gold and I go to the rest of everything. So when we started talking about gold in December, and we're talking about the structure change in gold. I had a price target of gold of $3,600 by the end of this year. My Q4 2025 price target was based on that. It was also the model was based on a 710 ton, a quarterly demand of 710 tons per quarter for the rest of this year.
Yeah.
This is demand from central banks, because I saw central banks pile into gold from 2022, and then investor demand. And then my Q2 2026 target for gold was $4,000 per ounce. Right. We saw gold hit 3,700 in Q3.
Yeah.
Right. So I'm smiling. And with the model I put at 710 tons per quarter of demand, we've seen up to 800 to 900 tons per quarter demand. It's just absolutely massive. This is a good time for gold because of the usual structural change we talked about, but also the US policy risk, geopolitical risk, and also then this cut coming in just makes it very exciting. And then you can even now go into other asset classes, and I'll still stick to gold. I'll stick to gold miners, right? So there are some interesting gold miners that have all-in costs that are quite low. When gold is 1,500, these guys like Newmont's, Barrick Gold, their costs are at 1,500. And they're selling this thing at 3,300, 3,600.
Cash flow, yeah.
You know, they've got reserves. The reserves are worth more. I see your leg is shaking because you're excited. You want to buy these stocks now, right? The reserves are worth more.
I feel like leaving the studio right away.
Reserves are worth more. Cash flow is worth more. I mean, even earnings. Some of these guys, for every 100, and Newmont's, for example, for every $100 gold goes up, their revenue goes up by $500 million.
Wow.
Right.
I mean, I've got stock in Barrick Gold since. I gotta go check that.
Yeah, that's up about 100% this year. Jeez. Barrick Gold, Newmont Gold, because these guys have really low costs, all-in costs for gold. They're like a levered play on gold, right? It's gold is up 40%, these guys are up 100%. So there's also the combination of these guys are gold miners, levered play, and then moving on risk assets, right? So I'll leave gold equities, but look at the broader equities markets. A rate cut means there's more business activity, there's more money flow of money.
Sure.
The cost of borrowing is lower. So now risk assets also rise. So your AI stocks, your tech stocks, crypto also. So we've seen crypto this week go from about 112,000 to 107, and Bitcoin,
yeah.
to 117,000. So it's almost like we're in it's scary to see, and I'm always afraid to say this, but we're in a nice raging bull market. And this cut, if it comes in, this is why I want a 50% cut. Because you're looking at all these asset classes and it's just looking a lot more interesting, a lot more risk to take. It's almost like it's a risk on market. Obviously, take risk with measure. Take risk with measure. But safe haven assets are good. Gold, silver.
I like the way you looked at the camera and said, take risk with measure.
Because I don't want it to be like,
it's not on you.
I don't want
It's not on you.
Disclaimer, said buy gold and then gold goes to 2,000. Like, oh my goodness, what? But Barrick Gold, for example, has all-in cost about $1,600.
Really?
Yeah, so their margins, this gold miners, they're raking it in. But anyway, so risk assets are good. And then it goes into African countries being able to borrow more at better prices. Tinubu's plan to borrow how many $1 billion of external debts is not as risky as we thought we were. Yeah, I'm just trying to be very careful with my words. But it's not as risky as we thought we were. And also, there's also less pressure on the central bank in all the interventions that they're going to take, because you already know that globally the dollar is already is weaker.
Yeah.
So it's all good for us.
All right, it's all good for us. By the way, we got a new whiskey bottle here. Thanks from the guys at Tilling. Especially asked for PT whiskey.
Thank you. I like my whiskey PT.
Arnold likes PT whiskey.
So Ugo, before we leave this Arnold's talk about the risk assets and all of that, right?
No, I was just gonna say that you're also drinking your own kind of whiskey.
Yeah, it's natural
one.
Yeah.
From the fountains of Jos.
Okay. No, so before we leave the discussion on risk assets, right? So my view is that a rate cut has already been factored into the equities market.
Yeah,
25 bips, the baseline.
Yeah. So that's based on the surge we've seen.
Exactly. Yes, that has been factored into the market.
Dow Jones is already off the hinges.
S&P is up.
Exactly.
So the equities market, the equities market will price in the news before the news comes in, right?
Of course.
But I think what's going to be a positive surprise will be if it's 50 or higher.
Yeah.
Then
And
there'll
that's how
be
150.
another.
Okay,
round.
that's how
Exactly.
Yeah,
Yes,
yeah.
exactly. But I still think like 25% has been priced into the market already. Really.
But what does it mean for 25 is priced in, right? So we've seen Naira at 1,499 according to Nairametrics. What does it
what
mean
the
if we
data
get
says.
because okay, let's assume that the strengthening in Naira is let's put a shadow on central bank intervention, and let's say because we saw a roaring rally of these assets from August, right? August, everything just started to really go really hard.
Yeah.
And then Naira also started to go really
strengthening
hard
as well.
So let's assume that as according to you, that's the assumption that the 25 basis points cuts has been priced in. So what happens if we then get a confirmation of 25 basis point cuts?
Get the confirmation, then that means the Naira is stable where it is.
So
right?
do we now get a pull? But does Naira get weaker?
No,
Based
I don't.
on
I
okay,
don't
now
think
it's confirmed. So the pricing in is this.
Is this? Yeah.
And now
So I guess is that a question?
that's a question. Yeah.
Yeah.
So
So my own view would be, I don't think that will make the Naira automatically stronger. It will probably make it stable, and we continue to see slight gains. But what will probably shift dynamics is when you see FPI start to come in, and that will likely happen in the fourth quarter. So that Naira getting stronger, I kind of see it happening in the fourth quarter of the year. That's what I see. And interestingly, October, November is usually a very, very dicey period for Naira because Naira tends to be weaker around that period.
so much
we don't
demand.
have coupon
Yeah,
payments,
yeah,
bond
and
redemption.
exactly.
We have a Eurobond.
So those are like
redemption.
the dicey period, but you could see Naira sustaining these gains beyond then,
Sustaining, so as in strengthening or
strengthening.
So for
guys,
me,
yeah.
for me,
I mean, yeah.
I mean, I've been bullish Naira all year.
No, you have. And you've been right, and you've been right to be.
okay. So for me, so what I think, right? I think that a 25 to 50 bips cut will just more or less keep the Naira stable.
Solidified.
Exactly right. Solidify the position, build confidence,
Okay.
and be stable exactly where we are and all of that. And for us to, if we're tying the Naira rate to solely the Fed rate, right? Like I said, a 7,500 bips cut, then we'll start seeing, things move and all of that. But, there are a lot of things to consider when you're talking about the exchange rate, right? So there are a lot of models that people use, to forecast the exchange rate. I think the one that I actually like is the bear model, right? Yeah, so the behavioral equilibrium exchange rate model. That
When you said bear model, I thought you meant
There's a
bear
series of
index.
people that know Buko.
No, let me tell you.
What's he talking about?
Let me tell you now, because so when I was a young analyst, I used to travel to different African countries, and I had a bear index.
Oh, okay.
So I would base the strength of a currency on the price of
the
beer
beer.
in different countries.
Oh, okay.
And I was like, oh my goodness, has someone made this official? Because it was like, in Nairobi, beer is this. In
That's like the
Casablanca,
big
beer is
Mac.
this.
It's like the big Mac index.
Yeah, so it was like,
And then you check
I was like, oh my goodness, is there now a beer index?
Was that an excuse to drink beer across Africa? Okay, so the behavioral equilibrium exchange rates, right, model, right? So which obviously deals with a lot of fundamentals, like your net foreign assets, your trade and the likes of that, right? If you run that model now, right, it tells you the coin is somewhere around 1.5, right? Yeah. So I personally think that that's where stability equilibrium is at the moment.
Okay.
Obviously based on inflation, based on Nigeria's inflation, the US CPI, and other factors that we see, right? So that's where it is at the moment. But obviously, in terms of the reforms that have been done by this government, right, we need to see it sustained for that to trickle down. And, I like reforms, right? As in what the government did with deregulation, with the currency. That was bold. That was very strong. And, people obviously will need to wait to see the impact of that.
We'll get to that. Let's quickly go to come down to Nigeria now, since we're already talking Nigeria.
Okay.
Some macro numbers out during the week as well. We've seen inflation numbers taper as well. We're now at 20.12%. Looks like we're going to leave this 20-ish range before the year ends. Who knows? Maybe we could hit that 15% that the president talked about at some point. Yeah, but we're 20. Yeah, I mean, we're 20.12%.
Yeah.
So this is the fifth consecutive month decline, of course, post rebasing. Food inflation also, dropped a bit, 20.18%. This is year on year, of course. And so I don't know if you guys read that report. what's your take on what you've seen so far in terms of how inflation is falling?
No, I think it's moving in the right direction, right? Obviously, it's even beat analyst estimates, right?
Yeah.
I think most analysts were expecting around 21 point something, 22, right?
Yeah.
So it came in at 20.12%. So that's positive. It's beating an analyst expectation, and also I think Arnold just took the words out of my mouth, right? We're going to the harvest season as well. Food inflation is a big chunk of the inflation. So we could see, inflation, trending lower towards the end of the year. I think the average based on World Bank's around 22% for the year, right? But I think I think it's fair given where we're coming from. But at least we're going to close the year less than 20, maybe 18, 19. That's basically what I think, really.
So I was talking to someone recently, also been a guest on Drinks and Mics, and he was basically saying that. So we're having an argument or having a discussion around inflation numbers, and he's like, do you really think that prices are up 20% year on year? So his argument was maybe inflation is probably lower than we think. Because at the end of the day, remember, inflation is year on year increase.
Yeah.
Right? So prices now versus the year before, are they really like 20% up? Because base effects should have had a lot more impact by now.
Well, so if I recall correctly, right, when did they introduce the band A electricity thing? It was this year, right?
It was last year.
Was it last year?
Yeah. It was
Okay.
last year. It was
Okay.
last year.
Okay, but I would say prices
Maybe last
really.
year.
So where we are right now is more or less price stability. To be honest, that is where I think we are right now. Yeah. So we've that, and that's why we're seeing inflation, trend lower, right? But I would say, looking at obviously going to the stores, picking items off the shelf. Honestly, I haven't been really sensitive to the price increase. I'm not going to tell you that I have noticed that much. No. But I know. Let's not go there. But we've seen petrol prices. We all have seen
Go
that,
down,
right?
yeah.
Exactly. So it's up. Exactly. So we all have seen that. So there's inflation out there, and people argue about inflation as in is it really 20%? Is it 5%? At times people say it should be higher than 20%, right? Based on where you sit, right? But this is an aggregate for the whole country, right? There's rural inflation, there's the urban inflation. But you'll expect that urban inflation is higher here. I think one thing you can also pick real estate prices, right? What do you see? They're higher than what they were last year. At times more than 40%, right? Exactly. So that tells you that there's inflation out there in reality.
So but Arnold, is it really inflation out there? Or because there is inflation, right? And then there is the fact that prices are just sticky. Like they are so expensive.
They're already high.
Even if
They
they're
can't
not
get
rising,
higher.
they're high. So
Yeah.
they're just out of the reach of people.
Yeah, so that's what it is.
Which one
right?
is worse?
So that's what it is, right? So it's like it's high, can't get any higher, right? So if it does get higher, it's not as high. It's not the rates of change. Is not as
drastic
as drastic.
yeah.
So if you look at where we were last year, where on a month-to-month, on a 3-month, quarterly basis, whatever it is, we saw aggressive price increases. Absolutely aggressive price increases. I can speak personally, and I'm sure most people can speak, and you guys can speak to say you're not seeing that aggression anymore.
Yeah.
You know that if somebody tries to increase the price on you, they can't say, oh, it's because the Naira is weaker. That was the excuse last year, right? Oh, Naira is not what it was, but now there's no reason for even vendors to actually take the prices up in a crazy way. So I would say that I'm personally, from my perspective, and I think from most people's perspectives, we can actually see that the rate of change is not as aggressive, and the rate of and this change from DYDX, right, is not as high as it was last year. So a 20.1% inflation. If I go to how my pocket feels and the number I see, I can see the connection.
Oh, by the way, month-to-month inflation was the lowest we've seen in a long time.
Yeah,
It was 4%
exactly.
here,
Exactly. Yeah.
Compared to 2% in July. So kind of looks like these inflation numbers are going down. But again, like I say, how do you then account for shrinkflation? Because I guess that's something that doesn't pop up in the data, which is people are buying so maybe the price of the bottle of water is probably say 200 Naira, right? And I'm not saying this is how it is, but let's assume this is what you used to get before. But now people are getting this. So you have products today that they just saturatize.
Of course.
Yeah. So how do you factor in that kind of inflation? Like where does that? Because you're seeing a lot of that now happen.
Yes.
Whether it's milk you're buying,
of course.
whether it's sugar, anything that is sachetized, right? Even some bottle things these days.
Yeah.
It's really not like as full as it used to be.
Well, so
how do you factor that inflation?
Again, we talked about the manufacturers, right? They need to stay in business, right? So their input cost has gone high, right? And they can't fully pass on the costs to the end users. Just like we said, prices are sticky. And some prices are sticky for a reason.
Yeah.
Right. So instead of obviously, still giving you the same maybe 500 grams in the tin, right? Just probably putting 400 grams and sell at the same price.
Gbenga. So how do we price that inflation? Because you see, it's one thing for me to buy. I used to buy this, for example, using this as an example, 100 naira. Okay. Now it's gone up to 200 or 150. But let's even say 120, right? Which is 20%.
20%. Sure.
Good. Yeah. But this is how it is bottled down. Half. So when you're capturing inflation, you don't capture that difference.
No, you hardly know.
Exactly. So isn't that also some of the problems that Nigerians are having? Like, I don't understand. Like, okay, yes, so inflation is coming down, right?
Yeah.
Like we all see that's what the data is telling us. But you find out that households are spending faster than before. So spending more than before. So what it means is that you buy groceries at home and then within a few days, it's done.
Yeah. Okay.
And you probably spend twice as much as did last year. But it's also because things are smaller now. So the tuber of yam is smaller now. Tuber yam is smaller. It is smaller. You don't see tuber of yam that's like this and you see the one that's like this. Do you get?
I see what you mean.
So that's what I mean. So you have like things are a lot smaller. Than you don't even see all those very big fat plantains anymore. So you probably see those very slim ones. So how do we account for those ones?
See, we cannot talk about the inflation, right, without talking about going down to the consumer and household levels, right? And this is something I haven't, saying. I did when I was in my research days in RMB, right? We did a very fantastic report, and I still think about it today. It's quite thematic. It's about the consumer, right? The Nigerian consumer. What we've seen since 2017 till now, there's been massive downtrading, right?
What does that mean?
So basically, right? So there are different brands of goods, right? So I just want to promote. I don't want to promote any brand on this show, right? Because no one has paid for advert.
Go ahead. It's okay.
Okay. So for example, right? You have brand. Let's take diapers for example. I like to use that example, right?
That's like who? Sorry.
Diapers, okay. Right? So back in the days, you only see maybe one or two brands on the shelf: Huggies, Pampers, imported on a solid premium brands. When you walk into the stores now, you see all sorts of brands, right? Because to the average Nigerian, right, diapers is diapers, right? So why should I pay 20% premium for the Huggies, for the Pampers, when I can get something cheaper? So people have, over time, downtraded, right? Instead of go for the expensive brand, they go to brands that are more affordable.
Yeah, which is only local.
Exactly. Even in the beer market as well, that happened. Yeah. We saw the big boys lose the market share to international breweries as well, right?
Yeah.
So people downtraded in that segment as well. If you look at seasoning, right, the popular seasoning that everyone uses is no Maggie, but there are many brands out there now. Exactly. That people are exactly. Even in the space of detergent, that's why you see the likes of PZ, they are losing market share and they're leaving the country because people cannot really afford those price points again. Yeah. And there are cheaper brands here that people are patronizing.
So let me play devil's advocate, right? And maybe I'm just being a devil's advocate. And maybe even going ahead of topics if we're going to talk about this. So these guys have exited, which they always do when things get hairy. But now we get a 75 basis point rate cuts in 6 months. These guys say, hold on a minute. That carry trade is back on, right? They can now come back. FPI might come in Q4, as Ugodre said. We all know that FDI follows FPI.
Sure.
What happens when FDI comes in and these new diapers come in or new beer comes in? Do you think our appetite will then now change? Because we'll also feel richer, right? So that cycle coming again.
At that point.
And this should happen within 3 years, in my view.
It takes
right?
a while, to be honest with you, right? For to get to the house. Like right now, when price stability period, right?
Yeah.
So households living standard will not improve immediately,
Mm-hmm.
but you see a bit of stability, which is the period 0 to maybe 1 to 3 years. That's where we are right now.
Yeah.
When it start getting to like 4, 5 years,
Then we start feeling richer.
We start feeling richer.
Yeah.
And then people can start, going back to old habits.
Yeah.
Which they say that's hard. Exactly.
But isn't this a purely sales strategy where you get a new player coming to the market who's playing the long game and basically undercuts competitors.
Yeah.
Price is pretty low, right?
Okay.
Knows that let me price us at low for a certain period, and then the big boys probably start to lose market share, and then they fall off, and then they exit, and then by the time I'm probably now the dominant player because people are very used to
your product.
and they're gonna start to rate prices.
Yeah.
Isn't that what happens?
I guess it's an opportunity.
It's a bit of both.
Yeah, because I kind of feel like that's
it's a bit
what
of both.
that's what most of the Southeast Asian owned businesses are doing. So this guy,
Yeah, 100%.
They're
They're
ready
coming
to play
now.
at a
They're
very
coming,
low price, and then they go on and they're playing a long game. And then most of the Western companies that can, that probably report quarter on quarter.
Can't survive.
Like Trump.
Yeah,
Trump
and
is-
that reminds me of another topic I wanted to talk about later if time
He
permits.
doesn't want to burden the companies with it.
Yeah,
Too much paperwork.
so let's
They're
go.
not complaining, are they?
Yeah. So let's go to trade as well. Another macro numbers was trade. So trade numbers were out during the week, and trade surplus 7.4 trillion in Q2. So it kind of looks like we had more exports than imports as well. We're still importing petroleum. Petroleum products is quite surprising to me though, in significant numbers. But more than anything else, we're seeing more exports than imports. Even though most of the exports still remains crude. How positive is this for the economy from a macro standpoint?
No, trade surplus. I'll say it's surplus, right? It's positive because obviously you know what that means for us, right? But I think the most important thing is to really go into the data and say what are we importing, what are we exporting, and are there opportunities for import substitution? I think that is very key. We've seen that over time, right? The Dangote refineries here, obviously we still import petroleum products, but I believe not as much as we used to do back then. So yeah, I'll say it's positive, right? But I think looking at the data and seeing what can be done more, I think that should be, in terms of policy direction, that is where the focus should be. Because you can have a trade surplus in one quarter and the next quarter, things flip, right?
Yeah, but we're having surpluses for about better part of a year now.
Yeah, but like I said, things can still flip. So is it a sustainable shift in trade, right? What is driving it? Like I said, the Dangote refinery is a plus for us, right? As a country, exactly. So is this sustainable?
But also, how much of the surplus is currency, right? So if you think about it, I'm looking at it from when the devaluation, and I'm asking you, right? When currency gets weaker, naturally, what you export makes more money.
Okay. Yeah.
Right.
Yeah.
So
now that currency is weakening,
exactly.
it's strengthening. So the receipts that we're getting in Naira.
Exactly. So what happens? So because how much of that surplus? Because you said it's been a surplus for a while, right? So I'm sure the surplus even kicked in more when we had this devaluation, right? Last year.
Yeah.
So now that we're seeing
stability,
a few of us are seeing a strengthening in Naira. What happens? Right? How does that affect us? It's the question now.
Yeah, exactly. And that's why I would say that we need to look at the data and see exactly what we're doing and if it's sustainable. If it's not, then we need to work more on that really as a country.
Okay, so talking about exports and maybe pivoting or going back to Naira, we did talk about the exchange rate at some point. So you've seen a number of tailwinds now that could maybe propel this exchange rate stability that we're seeing. Inflation numbers going down, export numbers still strong, or at least in terms of our trade, we're having trade surpluses. There's a rate cut that might be coming in, who knows, anytime soon. Don't you see this as some kind of mega tailwind for the exchange rate going forward as well? I mean, like, think about it. If you're a foreign investor and you're seeing these numbers, right? You're seeing inflation numbers going down. You're seeing trade surplus steady over the last few months.
Few quarters,
You're seeing foreign portfolio, inflows or capital importation numbers go up, external reserves 40 billion plus. I mean, if you were an foreign investor, how would you be seeing Nigeria?
No, so I'll say Nigeria is looking much more attractive, to be honest, right? Given all the things that have been happening, and I want to take a step back to the reforms. I like to call it reforms, right? Because the deregulation, the devaluation was painful, right? Because the way it happened, and if I were to have a view on how deregulation should be done, I prefer what I call the Jordanian style. So basically in Jordan, right, when they deregulated, right, it was over a period. They identified safety nets, and it didn't just happen overnight. But obviously, given
it's not the same thing here, though. It kind of looks like it took, even though they said deregulation was first subsidy removal was out on the first day, but it continued for some months.
But in Jordan, there was a program, right, that was known to everybody.
It was explained.
Explained. So it was explained. There was a program, and there was an adjustment period. We had safety nets that were put in place. I know the other help. But again, given knowing the country that we are in, right, if you want to adopt the Jordanian style, you're probably going to meet a lot of roadblock and all of that. So
and you just get stuck.
Exactly. So you will probably be forced to pull back and all of that. Yeah. So that happened. Painful as it is, I think the countries begin to reap the benefits, right? We're seeing that. And, if you're looking at inflows into a country, right, the people that have the deep pockets, right, they look at all these things, right? Am I going to, probably give you money to pay subsidies? That's what people ask those questions, right? So it's like, is the government borrowing to pay subsidies, right? Basically, and that's a question that every financier would ask, right? And again, obviously, so we say there's no more subsidy. So what are we using the subsidy fund in quote? I know there's no subsidy fund, but what are we using the savings for? Those are key questions that needs to be asked and that needs to be answered as well. But I'll say, yes, Nigeria is looking much more attractive from an investment perspective, given everything that we're seeing right now. What has been in the minds of investors, I think two key things has been, I'll say three. One has been security. Yeah, I think there's been some level of improvement in security. Second, I would say inflation. We're seeing what the data is saying. Then I also see the exchange rate as well. And we are seeing, where things are going. So I would say, yes, it's looking good. It might not be where we want to be, as a country and as a people. But I believe there's still, more to be done.
I'm not sure about security though, but I mean, I know hearing Gbenga and everything that you've seen, Nigeria's equivalent of the Fed, as the MPC, is going to be meeting next week. And I guess by the time they're done, we'll have had the next session of Drinks and Mics. What are your expectations? Ghana just had theirs.
Quite massive, 100 and something basis points.
And they reduced rates by, I think 350. Was it not 350?
350? Yeah, it was quite a huge amount.
350 or 250.
That we saw. So that was quite a huge number. And our own CBN is meeting, I guess, next week.
Next week, 22nd, 23rd.
22nd, 23rd. So are we going to do a Ghana 350 beeps or? Beeps is basis points.
Basis points, yeah. So I don't think we do a 350 basis points, but I think we do 50 basis points now and then 100 towards the end of the year, and then we have a full. And I'll tell you
go
why.
From 27.5% to 27%.
That's aggressive.
I'll tell you why. Right? So I've been.
Wow. Do you? Are you saying this? Are you looking at Cardoso? Like, are you?
Imagine Cardoso saying take it 50 basis points next week. Yeah, but I'll tell you why. Right? So if you look at the a few reasons and a few points, and I'll try to remember and explain. So if you look at the minutes from the last central bank meeting. The rhetoric was a hold, and the reason rhetoric was a hold is because of the slow change in disinflation, right? So from the months of April to July, we had disinflation, but it was quite slow, and then we've seen a huge 100 and whatever basis points inflation. So it's from 21.8 to 20.12, and then you talked about harvest period this month, which also will push, in my view, inflation down to about high 18s, maybe 18.6 to 18.9. And then about a month after is when the harvest really hits the markets. So then when it hits the markets, we're going to get a stronger rate of this inflation, in my view, to about 17. I won't be surprised if we end the year at 16 or maybe 15, like Tinubu said. So that's one of the reasons. Another reason is if you actually think about it, we've seen M2, our money supply, actually dwindle, right? The central bank has a money supply target of 15.6% year-on-year growth, and we're at 15.7%. And last year we're at 40% money supply. So there's a lot of liquidity in the market last year. There still is liquidity, but actually that M2 growth has really slowed down to the central bank's targets. Another point that I like to add is I've been spending time with a lot of manufacturers, and I've really seen how credit growth has affected them. And when you then go back to the numbers, you see that we had an average credit growth rate of 60% last year, and first half of this year is 3.1%. So that means this tightening has really tightened these guys to the point of we're choked. So the central bank has to now, in my view, do their part to actually loosen monetary policy a little bit. So 50 basis point cut is not unrealistic.
Don't you see them? I mean, you know what? Let me ask Gbenga first.
Okay.
What do you see?
Okay, so well, I have a slightly different view from Arnold. To be honest, I think 150 this year it's aggressive. Like 50 now, 100 for the end of the year. I think it's aggressive, and I'll just understand where you're coming from in terms of credit to the real sector and the likes. But I think we should also more or less look at the balance sheet of the local lenders, right, and see what the growth has been in loans and advances, especially the Naira loans and advances, right? You touched on 60%, I think, last year over the last few years. The question is how much of that is local currency, how much of that is due to devaluation, right? I think it's also very important, right, to also put things into perspective, because you could see 60% growth and maybe 40 or 20% of that is due to currency devaluation. Exactly.
Not necessarily more lending.
Not necessarily more lending to, exactly. So on the basis of that, right, I don't think that there's an immediate transmission, from a rate cut by the central bank to the real sector in Nigeria. Okay. I think what I think we'll see is that I'll probably see between maybe 50. I'll say between now and the end of the year, maybe 50 to 75 max, right? I don't see 100, and if you say 75, I think that is fine, and I'll tell you why. Because there hasn't been that transmission in a real sense to the real sector. And that is the truth, right? And there are many reasons why that hasn't happened over time. And that's why you see all these policies about you must lend to this sector, the government ought to support this sector, because the banks are in business to make money, right? Not to lose money, right? So if there's a belief that if I'm going to fund a customer and to recover that money will be hard, I better put my money in a risk-free asset. Exactly. Exactly. But I agree with you. The right thing to do is to cut rate, but I don't see 150 bips for the end of the year. I think at this current MPC, if there's going to be a rate cut, I think the house is going to be divided, right? The house is going to be divided.
Exactly. You don't see a unanimous.
No, I don't think there's because let's assume we expect the Fed to cut, right? And again, the central bank is not just only focused on growing credit to the private sector, right? There's also the currency stability as well. So there are a lot of questions. Back in the days when you say there's cash in the system, that. The Naira is chasing FX, exactly. So there's that behavioral tendency of let's watch and see how things go. So I don't think that the central bank is going to be aggressive in terms of.
But I think the central bank needs to do its part though, and I think they need to be seen doing their part. Yes, the local lender, banks would rather buy Omo than lend to a business. But when you speak to these guys, these manufacturers are borrowing at 35%, right?
Yeah, no, I agree.
I think a reduction in NPR will actually.
Don't you think that one of the options for the CBN will probably to keep rates the same and then maybe reduce CRR and some of those other things?
That's another way.
That's another way to look at it. That's another way to look at it. Yeah.
Yeah, so what does that mean if they do that then? Does it mean more liquidity for banks?
I guess it reduces lending costs to the real markets in that sense, right? Yeah. Does it?
More liquidity to the banks? It depends on what they use the liquidity for.
Depends on what liquidity for,
That's the truth. And again, you should also know that there's heightened regulatory oversight in terms of risk assets now, right? You get I'm sure you've seen all those directives from central bank, exactly. So I wouldn't say aggressive lending, exactly. Yeah, exactly.
But banks are raising money now. I mean, I think there are about 6 banks now, even though the CBN, I think we had 8 banks, but we could confirm 6 banks at Nairametrics that have met recapitalization. So you've seen extra, maybe a trillion naira or thereabout being raised by banks or close to that over the last 1 year. Where is that money? Is that money just, is it in treasury bills or
that
is
money-
it
is it buying
MGM bonds?
Omo? Is it buying
Where
Omo?
is it? Is
The
it buying
money is
Omo?
definitely not
What's it
going as
doing?
credit to the private sector at the
No,
moment.
it's not.
Right? Exactly.
We're
It's
seeing
not.
it.
So then, what's
Yeah.
that money going to do then? Like, where's that money going to go to? Is it going to be? I mean, I'm also hearing that. Well, that money could probably just be, essentially used for forbearance and all that stuff, and cleaning up books and all that. I don't know, but that money has got to go somewhere. So where's
It has to go
It's going to go to the
somewhere.
manufacturers.
I hope. I mean, the thing is, I wanted to, right? I really, and we actually really needed to, and that's why I think, unfortunately, it seems like banks tend to move when the central bank does its part, when the regulator, when they come out to actually encourage them to do something. And I think that's why I really think the NPR needs to go down. I think when the NPR goes down, I think these guys will start looking at other things to
But Gbenga, are banks lenders or are they like
traders.
traders?
Banks are lenders.
I don't. Our own banks. Are they lenders?
Our
or
banks right
traders?
now, it's easy money, man. See, listen, if I
Are they lenders or traders?
I don't want to, but if I was sitting on the bank treasury desk and I had to lend to Nairametrics at 5%, or I had to buy Omo, I don't want to lose my job, guys.
That's
You know,
right.
no one. I'm not going to lose my job by buying Omo Nigeria defaults. Right?
yeah.
Oh, you tried, son. You tried.
Yeah.
But if
Like you probably didn't access the credit.
I can go buy a yacht with it,
exactly.
So you tell us, are banks lenders or are they traders? What do you think, Nigerian banks? I'd be nice to hear from bankers as well, whether they're lenders or traders. But let's sort of, pivot or move to something else that is also pertinent. And this is as much as a fallout of what Arnold has said now about, how businesses are being affected by a lot of these policies. And some of the comments that we've even got from the last Drinks with Marks. So you're seeing the economy basically improve on the macro side, right? Things look okay on macro level. So you're seeing inflation numbers is tapering. You're seeing the exchange rate go in the right direction over a very short period. At least there's fuel prices are also, sort of like, stagnated.
Yeah.
External reserves looking good. Even the oil prices, we've seen it going down a little bit, but who knows with expected rate cuts. So there are a number of things that show that the economy seems to be improving. Even the stock market is doing well. But people are suffering, bro. So there's hunger in the land. People are hungry. People don't feel it, right? So it's as if there's sort of a log jam in the transmission mechanism between, policies at the macro level and how Nigerians are feeling it. Now, there's a fiscal problem. I'm going to get to that as well, but I just wanted to get your views here. What else can the CBN do? Where is the link? How do regular Nigerians start to feel the impact of some of the things that's going on?
Well, so reforms take time. I think that is the start.
Who's going to
starting
take
point.
that? Like,
No,
how are you gonna
because
tell that?
to be honest, right, reforms take time. So if you recall when these reforms started, right, with the deregulation, the devaluation, I'm sure we're all in arms, right? Like, this is not sustainable. The country is going to explode. Things were like out of reach, right? Exactly, for virtually everybody, right? But now I think we've moved from that phase to a phase of price stability, or I call adaptation, right? So we've soaked in the pain, right? It was a painful one. We've soaked in the pain. We're at the phase where I like to call price stability, and we're going to be in this phase for a while before we start seeing improvement in living standard. So it's called macro for a reason, to be honest, right? No, there's macro and there's micro. There are multiple micros to make up the macro.
Macros,
exactly. So I was speaking with a friend recently, and I was talking about how we expected reforms or whatever was being done in developed economy to immediately transmit into to the common man, and I'm like, those are economies that are much more efficient than our own economy, right? If it's going to take them that long, for it to make reforms and for it to be felt, then imagine a system that's not as efficient as that, how long it is going to take. There are several studies out there that talks about reform or policy transmissions, in emerging markets, in developed markets, and in Africa. You see, for Africa, for reform to be institutionalized, right? Because right now we have a government that's 4 years, every 4 years, right? So for reforms to be institutionalized, research says it takes about within 15 to 20 years, right, to be fully institutionalized. And if you look at some countries where, basically you've seen continuity in government, right, and those reforms have lasted, and people like to use them as the gold standard, and all of that. So I would say we've gone through the most painful side of things, to be honest. I don't think that we're going to feel that much pain again as a country, that based on no. I honestly don't think so. If you continue on this path, right? Yeah. Because like I said, it takes time for reforms to fully filter down. Yeah. So price stability, good. We're there right now. We'll see what the inflation numbers are saying. We hopefully for the end of the year, 18, 19. Next year, hopefully it gets better, right? Yeah. If there are no major shocks. So price stability is good. Then the next one would be, we need to start attracting FDI, not FPIs now, right? Mm-hmm. So if you look at, and I like to use the President Obasanjo's era, I think it's a very good one, right? Mm. So there's something that's called, I'll call it inequality filters, right? So when there's a reform and when the gain starts happening, it hits the educated, the urban, the politically exposed, then before it gets to the poor rural households.
Repeat that again.
No, okay. So I'm saying when reforms, the gain starts, happening. Let's just go back to 1999. We had President Obasanjo, right? So when the reforms started happening, when things,
so it hits who? It hits
the educated, the urban, the political exposed. But obviously within those three, no particular order. Yeah. But the last is the poor rural people, exactly. Yeah. Because you see there'll be industrialization. Businesses will be growing. There'll be employment and all of that. So that happens rapidly at the upper level before it filters down. That's the inequality filter. And majority, if you look at data for Nigeria, obviously, these are 70% rural, so you won't feel it immediately. It will take time. Transmission will take time, right? But I think we're on the right path as a country, to be honest. If someone had told me that I would be buying PMS at maybe 800, 700, 900, right? And that there'll still be cars on the road today, I'm sure you will say it's not possible. But again, so we'll get there. I think it's a journey. We'll get there. But obviously, I think the worst is behind, to be honest. The pains have been taken. We've moved on. The currency was one time getting close to $2,000, right? Yeah. Right? No one is projecting a $2,000 currency right now. I ran the bear model this week, right?
Okay.
And
what's your model saying? Okay, so what's your end of year targets for 2025, then 26 and 27?
No, so I only ran it for 2025, to be honest, right? I didn't be on 2025, and I think it's around 1.5 basically, right? Yeah.
Okay, so
I had 1.538.
Okay, so you said a lot now, right? Now, so picture a regular guy on the street, 24, 25, earning maybe 250, 300K, and he's seen, watch Drinks and Mike's exchange rate is at 1.448, or using your model, it's probably going to land about 1.538. What does that mean to him, man? Like, so what? What exactly does that mean? Like, how does that better his life? Are prices going to come down? Like, what does it mean? Because I think it's probably important to translate these things, right? Yeah, because that's part of what we do here. So we've got to find a way to say, look, this is exactly the fact that we've gone from maybe 1.6 something this time last year or sometime this year to 1.538 or 1.4.
Yeah.
What does it mean?
Okay, so I think to put it plainly, what most Nigerians can relate with, right? So there's a relationship between oil price and foreign exchange.
Okay.
And the price of petrol in the markets.
Okay.
Exactly.
Okay.
So if you have the exchange at 2,000, right? Mm-hmm. You definitely be buying petrol at a higher price, assuming the oil price remains where it is.
Yeah.
So an appreciating Naira, right, is positive in the sense that you get a PMS cheaper.
Okay.
So That's one.
And that fits into your food.
Exactly. That fits into transportation. For most Nigerians actually use PMS power generator when there's no power, right? So if the currency was at 2,000, that means you'll be buying more you'll be spending more, right, to buy the same amount of fuel you need to power generators.
Yeah.
So Nigeria is an informal sector, right? If you go to the market, to the stores, there are smaller generators that are run on PMS. So there's some cost savings, right, from the Naira appreciating. This one that can directly be transmitted, to people. Transportation costs, I think that is very key. Honestly, I was shocked when I heard about how much transportation is these days, right? When people take buses, I'm like, what? As much as 1K, 1.5.
Yes.
I'm like, how do you get so that should help really when the currency keeps appreciating. You're probably going to get PMS cheaper. It's going to affect a lot of things, transportation, movement from here and there. I think that is one. And secondly, also, so for just use the example you used, if you earn 250K. So I honestly think that in terms of what you consume, right? What the focus is, I think it should be strategic, right? Because there's a high appetite in Nigeria for foreign imported goods, right? So for goods that are imported, right, which I'll say most of the things that we consume in Nigeria are either imported or they have an import component, right? Exactly. So we should see, when the currency appreciates, right, we should see that transmission, through the cycle, hopefully.
Cheaper goods.
Yes, exactly. So hopefully.
But how long does it need to last? How long does the exchange rate needs to be at this level for you to see that transmission? Because things could change.
Yeah, that's what I'm saying, that hopefully, because there are a lot of factors at play. We live in an interconnected world, right? We're not isolated. But I think as a country, we seem to be doing the right things, right? So even look at the oil and gas sector now, we basically seeing local players coming together to buy assets that have been, in quotes, not abandoned, right? Not so we basically those players come in, buying these assets, pumping in money and producing more oil. So the more oil we produce, the more effects we have. That will support our currency, because there's a relationship between our currency and also oil price and also oil production as well. So all these things, would mean that for someone that's earning 250K, I would say that's what Ugo is asking, right? So I'm just going to stick to that 250K, right? There should be sensitivity to what is being consumed. It's very important. There's rent to be paid. There's electricity bill to be paid. I'm sure we are all aware of how rents are increasing this. I'm not sure what the standard is for rent.
Somebody just told me today, 2-bed in Lekki for 15 million.
Exactly.
Is one.
Exactly.
Wow.
So I think there are some things that you can control, and I think that should be the key focus. There are some that are outside control.
So that's something I always question. Sorry, this rent thing really is something that's really hurts me, because
I saw a video about
there's no mortgage, right? So
there's mortgage.
So why is my rent?
It's just 30%.
Why do landlords
single digit where?
Yeah, I mean, check my podcast. It's on my coffee table.
Okay,
podcast.
all right.
So because I always wonder, what's the link between rental price increases and the economy, right? It's why is your landlord increasing your rent when he's not tied to MPR in any way?
Yeah, I hear that argument
a
a lot, and the reason why that happens, and I think a lot of people don't really understand.
I don't understand.
People don't understand this thing, but it's
there's no maths.
You don't need to have math. It's just pure market. It's demand and supply.
No, and again,
that's it. So
beyond that, there's also the concept of replacement costs. That's what a lot of people do as well.
Yeah. Apart from
we're here talking about GDP per capita is reducing, spending power is reducing. So where's the demand coming from?
That's what I'm telling you.
I can't afford to pay double on the demand side.
Yeah.
So
that's why I say it's demand. So
but I can't afford
demand. It's demand and it's also funding structure, right? So what am I saying? So on the funding structure side, you got a lot of people who own properties who the properties they own is not tied to any mortgage. It's not tied to any running cost.
Exactly.
So what that means is that you're happy to go on a vacancy rate of 6 months if you don't get the deal that you want.
Okay.
So, but if you have the mortgage that you're paying, then you know that you can't afford to go on a vacancy rate of more than 3 months. So you're sort of forced to want to rent, right? That's one. Then on the other hand, so it's two things playing. On the other hand, is demand as well. So you also have demand coming as well. So you've got somebody who's looking for a house. You say, look, my house is 8 million.
Yeah, take it or leave
You
it.
take it or leave it. So if that person wants to pay, that's demand.
So you're
there's-
saying that if mortgages come into play,
yes.
the price of rent should reduce?
Yes, because you're
That's
also
an
going to
interesting
have
perspective.
because what's going to happen is that
but
a
again-
lot more people are going to own homes
'Cause it's running costs.
and these people that own homes are not going to be able to rent.
I
That's an
sort of
interesting
disagree with you.
perspective. Yeah, that's a very
and I'll
interesting-
tell you why, right?
Yeah.
Because the mortgage rate is
It's gonna
the
be a
cost is
killer.
unsustainable.
No.
7.5?
Hear what you said now. He
Yeah.
said when mortgage comes on stream, and mortgage coming on stream is not at 35%.
Okay. What
Yeah,
what
it's
rate
got-
would you say?
Mortgage has to be tied to
it can be
monetary
it can
policy.
be more than 12%.
But
Based on what?
that's the point. There's going to be a mismatch with inflation,
you
monetary
can't price
policy,
mortgage
and
to
mortgage.
12%.
No, we're
Yeah.
talking about mortgage today.
Okay.
I'm
Okay.
saying that
Okay.
mortgage in another 2 years. Remember,
why-
I also
why
told you that
12%?
there are several funds. I just got to learn about this a few days ago from one of the podcasts that I had. There's a lot of mortgage whatever out there now, where single digit mortgage rates by the government. To my surprise.
Yeah, but again, how much can they give it? 15
I'm
million,
hearing
10 million?
No, I'm hearing 30. I was shocked myself, Gbenga. I'm hearing 30, 35 million in mortgages. Yeah, I'm even here. In fact,
What's
one of
the loan to value? How much do you have to
one
put
of the
down?
questions that I had
Yeah,
in that
pretty,
podcast was, can I get a mortgage if I earn 500K? And the guy said, yes, that's exactly who the mortgage is for. So that's surprising to me as well. So
Well, good. You can't even communicate today. You can't. You're already old.
no, I'm not talking about me.
So
I'm not talking about me.
It just matters, right?
No.
So please,
10 years pay
I'm
off.
still young.
Anyway,
Anyway, so
you just passed it on to the kids.
yeah,
finish
so
the payments.
that's my point. So that's why you see sticky rent in Nigeria. And another thing as well is people also most times look at location and you wonder why people are paying $1 billion for a house that is on a what you would call a slum.
Yeah.
Right? Because the roads are bad, the
Floods, Lagos is
and all that kind of
sinking,
stuff.
yeah.
Yeah. But at the end of the day, location is not necessarily street or area.
What is
Location
it?
is where people stay. So I want to stay where Gbenga and Arnold stay, around their area. So if where Gbenga and Arnold stay is flooded, I don't care because that's where Gbenga and Arnold stay.
okay. Yeah.
And so based on our demographic,
Yeah.
the rent is always going to be high. That's what's happening. So
Yeah.
for some reason, a lot of people just think, living in some parts of Lekki gives you some kind of middle class status because everybody that is around your peer group lives around there.
Lekki, yeah.
And so for that reason, that drives
Status-
demand, that
status
drives
play.
prices up.
Yeah.
That's what a lot of people don't understand. So that would always come first before you start to worry about the roads and all. What
that's
affects
something-
prices more is when you look out and then you see that your neighbor is not in your kind of status, right? Then you don't want to live in that area, even if the roads are great.
But
There
again,
are a lot of areas in Lagos that the roads they don't have floods.
Yeah.
The roads are great. Like if you go to some parts of the
Electricity makes
mainland,
sense.
they even have electricity, but you're not
Water's
going to live
clean.
there because your neighbor is not maybe someone that you think is on your, you know what I mean? So that's my own theory though. That's what I
again,
think.
but I think what can also help in this regard, right, is also transportation infrastructure.
Yeah.
Yeah. So if I know that I can stay in X place and I can there's a good infrastructure system,
Yeah.
I can get to the office in 20, 35
Yeah,
minutes, I can
100%.
predict
That
it.
also helps.
That would help.
100%.
That also
That would
helps
help.
as well.
Yeah.
Definitely.
100%.
But I don't know, before we close this up, that I want to hop on this another aspect of transaction mechanism, which you talked about, and that is being able to create jobs, especially manufacturing jobs.
Yeah.
So what next for the government, right? So okay, you've done all this, you've done all these painful reforms. CBN has done what it can do.
Yeah.
How do we now get to a part where companies can now start to produce, can now start to hire, expand, output, increase?
So for me,
what's
it's credit,
going to
credit,
unlock
man. And
that?
we've talked about this before. It's credit. We need to find, the government needs to find a way to encourage these guys to actually lend into these industries or these
How the
sectors
government
that actually
they want to lend,
big
but they're happy
employers.
to lend at 35%.
No, but it doesn't make sense. Why?
So what are they going to do? So how are they going to drop rates?
This is when I talk about financial suppression, right? Or
What's
financial
that?
repression, where you actually force
people to
these
say,
guys, you force these guys. No, you force the banks to lend. You force them to lend at a lower rate, and maybe you pay them off in another way. You give them OMO. You're giving them OMO.
Yeah, so that's basically intervention.
Yeah,
right?
you're already giving them OMO. You're saying, I'm giving you OMO at this percent. Use X percent of your liabilities.
but I
to now lend
thought
to-
bank interest rates are modeled on
Benchmarked.
cost of funds as well. So a bank that has a cost of fund, because the bank operates in the real economy as well.
Yeah.
So the bank's cost of funds is maybe around 25, 26%. You're not going to expect them to lend at less than 30%.
No, but you can. I think you can actually if CRR is actually CRR debits are coming and taking 50% of the deposits, then perhaps this 50% and 50% of deposits is in the CBN doing what? Right. Perhaps you can actually channel this into real economy.
Okay, so what risk exists for the CBN now if they decide to reduce CRR and just let money out? Like, what's the risk out there?
Money
Is there
supply.
a risk that people might want
Money
to start buying?
supply- money supply goes crazy.
It's exactly
So
what's the
money
money
supply goes
supply,
crazy.
liquidity, and also it could impact the currency as well. Yeah, so I think
So where do
that's,
we go from here?
That's,
then?
that's the key.
Because if you don't,
So maybe a tapered-
If you don't, go on.
No, a tapered reduction of CRR or forcing these banks to take some of the CRR into this. You have to, because CRR is a force, right? You're taking it, you're taking the deposits by force. So either you taper the CRR, you take it from 55%
That kind of
down
sounds
to
like what Emefiele did one time. I don't know if you remember, where they basically came up with this.
every time I talk about it, Samson always comes to my neck.
Seriously, yes, it did happen.
So,
Where-
yeah,
I don't know if you guys remember.
I remember.
Yeah,
that,
where-
that was why I was laughing when you were
Yeah,
saying those things.
at some point we have, because you see,
It was-
this problem's always
it was
rear its
implemented-
head, right? No, hold on. What you're saying has happened. There was a time when there was a need to lend to real sector, right? And what did they do? They came up with some funny
Intervention,
where,
exactly.
not even the intervention itself. They came up with some funny arrangement where they were forcing banks to keep some part of their CRR or whatever to lend to small businesses, right? Emefiele did that. So there was a part of your...
It's still an
your
intervention
vault.
by the central bank.
Your cabal,
Yeah,
whatever they call it.
exactly.
But it was not central bank direct intervention.
of
That's
course,
a different
of course.
one.
Yeah, sure.
But it was central bank saying, banks, you have to lend X amount to SMEs and blah, 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 blah. That really didn't work too.
So
Because at the end of the day, if it's not market designed, it's not going to work. So what's going to work? So how are manufacturers going to be able to get money?
I just
Or
don't think.
Are we just relying too much on banks? Because I know today, a lot of these companies you're talking about, they're all tapping into commercial papers.
Yeah, but not all.
doing
Not all
long-term bonds.
but just going back to the point, I just don't think that we can keep thinking free markets. We are not and should not be thinking free markets. I think that when you're trying to make something work, if you expose it to a free market, it won't work. There has to be some sort of regulator that comes in and, for lack of a better word, forces these policies
right?
and where we are. We can't be in a free capital.
So here's
free
one
capitalist
solution.
society.
Why can't companies, a lot of these manufacturing companies that are struggling, right? What if most of them get listed on an exchange?
Yeah.
And
Okay.
there's a lot more transparency. And through this so-called, policy or intervention that you expect from the government, and then these guys can then now tap into some kind of fund, because then they are listed, it's transparent, we know what they're doing with the money, you understand their business model. Why isn't that happening?
Well, that's something that can be considered, right? But I honestly don't think that it's automatically going to. Maybe if that happens, right? Maybe depending on their their rating or their credit quality, right? Maybe it shaves 200 300 bips off the current rate at which the market is. I think, I keep saying, I think we're on the right path as a country, right?
Yeah.
We've seen what's happening to inflation. So as we begin to see inflation taper, right, we'll see the MPR rate as well, come down as well. So, and that would impact funding cost as well. And once that impacts funding cost, right, the manufacturers are able to get funding cheaper because there's lower inflation. The benchmark rate is getting lower. Access to funding will improve, but obviously there's been a transmission period for that to happen. And again, so, okay, let's assume that there's an intervention today, right? And somehow all manufacturers get some form of magic facility, let's say is even 5%, right? And they all start producing. Who's going to buy? Where's the purchasing power? So that transmission needs to happen for there to be a sustainable growth. Because if everybody produces at 100% capacity today, let's assume that these guys are producing at maybe 20 and they all get money to they produce 100%. How many people can afford to buy the goods? So that transmission needs to happen. It's a path. It's a journey that we need to walk. That needs to take its time. I'm happy for there to be an intervention, right? Obviously, everyone needs an intervention, right? Television is not sustainable, even for the retail sector. Some people say like you want to get a facility from a bank at 30%. You want to get mortgage in the high 20%. It's not sustainable.
Doesn't make sense.
Exactly. So even for the manufacturing sector today, if they get at 15%, right, you start producing. The question is, who's going to buy? Is there enough sufficient purchasing power? And again, it depends on where you play. If you play in luxury goods, they're mostly price inelastic, right? You know, if say Glen is 2K, we'll go buy. If say it's 5K, we'll go buy. Exactly. Do you get? You're going to care about that change your price. Exactly. But the point is, if you now go down the economic ladder, right? Something moves from 10 naira to 20 naira. It's a shock, right? So that's exactly what I'm saying about the reforms, that it takes time.
The consumers have to order.
Exactly.
Okay, but also just so you sparked something for me, Ugodre, as well, when you talked about, because we're talking about going back to the fundraising side. As much as I am a big fan of financial repression, as you know, I'm also a fan of equity, right? Listen on the exchange.
Yes.
I think this is an interesting way.
That is CIO in you talking.
Yeah, but I think this is also, it's a wonderful way that a lot of people probably haven't actually explored, to actually list. And perhaps we can,
because listing, it de-risks a lot of things.
Like Trump talked about the SEC not requesting, or the audit companies not reporting quarterly. The NGX actually probably make it slightly easier on reporting, because I know some of these guys might not want to report to a certain degree, but you can make it easier for them to. I know the NESD is a little bit relaxed, but it's not open to.
Okay, so how long more because next year is obviously an election year or electioneering year, right? So how long does government have to ensure that this so-called policy transmission happens? 6 months, 3 months, 1 year?
So
when does it become like, man, you better start?
Transmission cannot be forced.
Question.
It cannot be forced, to be honest with you.
But it takes a while.
Yeah, it takes a while. You can only show the gains that have been
So
achieved.
that's the problem. So this
And this is one of my issues with democracy, right?
Okay.
I'm on a podcast.
No, but it's true.
I just realized I'm on a podcast.
No, all types of political structures have issues. Have their own downsides. So this is the downside of democracy.
Yeah, because reform takes a while to kick in.
Yeah, that's why I was careful in saying some countries where you've seen people for 10, 15, 20 years, right, have been taken as the gold standard.
Yeah,
but I was just silent on that.
And the thing is, we are looking at 4-year democracy, because you talked about an efficient economy can have a reform and they feel it in 18 months. They feel it in 24 months. Ours is deep, right? And the administration needs to see it through. I was about to say you need to give this current government credit, but the administration needs to see it through.
So should you really give the government credit then? If policy reforms does not transmit to like real life improvement in people's lives.
But it will eventually, though. It
will eventually.
It will eventually. It just takes a while. It's if you even look at one aspect.
So are we giving credit too early then?
Probably.
Yeah,
right.
Because
the reason we're giving it too early is because we're capital market guys, but we forget that capital market is a future. It prices in tomorrow, today,
yeah,
right.
Okay.
So we're looking at consumer stocks up 200%, because we're seeing that the consumer will get richer and be able to afford.
Exactly,
right.
Yeah.
So because we're capital market guys, we're giving credit too early. So the consumer that we're seeing will afford it tomorrow can't see it yet, but we can, because we're seeing international breweries is up, Champions breweries is up, Nigerian breweries is up, but so your model says 1 year for the forecast, right? And that's probably we need to give it 18 months, 24 months, and 5 years to kick in. So perhaps we're giving it too early, but we're getting enriched today because of the capital markets.
Okay. Let's move to something else that happened during the week, even though Arnold spoke about it already. So Trump says he doesn't want companies releasing results quarterly. Thinks you should do it biannually. And I mean, I'm sorry, you're wondering why are you guys talking about Trump? Right? Whatever this guy says,
and Tunji's not here.
People take it seriously globally, and it could have impact around the world. So why is this even an issue, Gbenga? Like, why is quarterly results a challenge?
Well, I wouldn't say it's a challenge, right? Because at least during my days in the equities market, I got a lot of quarterly reports, right? You could even get meetings between the quarterly reports and all of that. But obviously, it takes management time, right? So it depends. I would say it depends on the growth phase of the company, right? And what the company is. For companies that are matured and stable companies, right, they have a system in place that produces all of that and doesn't take so much of management's time to deliver those quarterly reports. Yeah. But obviously for companies where a lot of things are happening, regulatory shift, where they're just, maybe raising financing. So there's attention is being taken away from a few things. But I don't think that, it's a big deal, to be honest, to report on a quarterly basis. Some companies, even without Trump saying quarterly, some reports semi-annually as well. Not all companies report on a quarterly basis. Yeah. Exactly. So I don't think it's a big deal. But I would say putting the heart of an equity analyst, right? I'll say quarterly reporting is good, right? You're basically in touch with management. Exactly. Yeah. You don't wait on the 6 months when things are like bad, then you now start, reporting things. So I think the frequency of report on a quarterly basis, I think it's standard, and I think it should remain. Really, I don't have a problem.
Do you think it's undue burden on the company? Like like you don't need to, because I look at reports. I look at obviously naturally because I'm looking for catalysts when I'm buying a stock. Yeah. But I pay more attention to half yearly and annual reports because I know quarterly reports are not audited. Yeah. Right. It's more. I see quarterly reports as a conversation. This is how I'm doing so far. So far, yeah. Right. So I use it for catalyst. Yes, okay, maybe it reinforces my view that these guys are doing well. But I pay more attention to the the H1 and to the full year. So I understand
where Trump is coming from. Okay, so let's look at it this way, right? So your quarterly report, right, for let's say Q1, which is March, you probably get it in April or May. Yeah. Which is already H1. May, yeah. Exactly. Yeah. It's already like end of H1. Yeah. So if you're asking for H1 now, you're probably going to get it in August, September. Yeah, it's gone.
Yeah. Okay, so that's what you're saying. Quarterly reports gives you the interim.
Exactly. And for those that are looking to have active portfolio trading, right? You need that level of information for you to know what to do with your portfolio. Yeah. Right. Is that some people do rebalancing quite often, right?
There are countries that do have your report though.
They should be.
How do they trade then? How do their portfolio managers?
I honestly don't know, but this is what we've been used to, right, all our lives, and that's it. Yeah.
But to the point of those who criticize quarterly reports, does it really put pressure on companies? Like, does it really make companies think short term rather than long term?
So I think if a company is doing well, then they don't mind. But there's sometimes where the interim is tough. And they have to, I'm speaking from the point of the companies now, perhaps maybe a CEO can speak, but I can imagine how you having to report quarterly can actually cause just burden and stress, especially if you know that this is a smoothing in that period. And you're like, okay, between January and December, it's rough, around March, but you didn't have to tell them it's rough. But then sometimes the market overreacts. Right, the market might not understand the full story or the full everything, but they're just going to be an overreaction and say, oh, March, something's gone wrong in March. Okay, this is a bad stock. So I can see how an overreaction can make a good company look like a bad company if they have to report quarterly, doing a rough.
So why don't they do it this way? So why don't you have a situation where if you're a company that has maybe been in operation for, say, 10 years and below, report quarterly. If you're a company that is over 10 years, you can report biannually, because a company that is over 10 years, I mean, it's not like there's a lot of growth you're looking for. You're looking for just consistent dividend and all of that. Some of them will all have long-term restructuring plans. But companies that are less than 10 years, even if you're releasing quarterly numbers, different companies have different benchmarks. Some people are probably looking at they're not looking at your profitability. They're probably like looking at your sales growth, or your volume growth.
Sure, exactly.
And all of that.
Exactly.
So
Yeah.
it really doesn't always have to, be about profit.
No.
It can be about different things as well. The same way, and this is what also surprises me about this quarterly result. Argument. Startups that are not even listed give their investors monthly updates.
Monthly update, yeah.
Because if you're an investor in a company, you
wanna
want to
know
always
what's
going on. Yeah,
100%.
exactly.
You want to have updates.
Exactly.
So I don't understand why
I have to wait for 7-8 months.
For
Right.
7-8 months.
It's
Just
not-
doesn't make any
it's
sense
not-
at all.
Yeah.
You know?
And again, just to speak to what Arnold said, right? Yes. So good analysts understand seasonality.
Yes.
So and I think that is standard in all markets, right?
Yeah.
So when it's raining, that cement sales slows down.
Yeah.
So basically, quarterly will also help you understand the business better. It's just 4 times in the year.
You're right. It's a good
It's just 4 times in the year, right?
Yeah,
So
yeah,
it's not like you're reporting every month. So I still think the frequency of reporting, I think is, and I said something earlier on about where the company is in its growth phase, right? For companies that are matured, really, that are not necessarily growing and doing a lot of things, right? If say you want to report maybe every 6 months, it could fly, right? But they already have the what I call a well-oiled machine in place where they can just churn out their reports out quickly. If you look at the most efficient companies on the stock exchange today, there are companies that have been around for a while. They are leaders, right? And their report comes out on time.
Yeah.
So they don't have, but the ones that don't come out on time, they struggle.
something's wrong.
Exactly. So
I don't buy that. Anyway, one other thing that was in the news as well was the NGX. This is Nigeria now.
Okay.
And that they might probably move.
Yeah, I like that.
Closing bells to 5 p.m. from
I like that.
from 2:30.
I like that.
What does that change anyway?
well,
At least from your own
so I think what that does, right? It allows a lot of I'll say, so back in days when I used to be in the equities market, right? You have American investors as well, right?
Yeah,
so
time.
It gives them more time to do more trading, to do more things in the market. Yeah. So
Isn't that too long though? 5
No,
p.m.
I think it increases liquidity, increases
Yeah.
volume, gets more people
trades.
involved.
Yeah, exactly.
Retail investors that are at work, that have to buy, that have the ability to buy stocks on their phone, can buy stocks in their phone, right? Because right now it's 9:30 to 2:30.
Yeah,
It's
10:30 actually.
10:30 to 2:30.
10:30,
Yeah, it's too short.
it's too short. It's too short.
It's too short.
it's
I mean, I'll be
24
24 hours if it's possible.
24 hours.
Yeah, I want a 24-hour market, man. I wanted 24-hour. I love when I saw that. I was like, yeah, I championed it on. I'm in a WhatsApp group with the NGX. I'm like, yeah, this is good. I think it's a good idea. I think the world is shifting. South Africa is talking about 24 hours. The US is talking about 24 hours. I don't know if they're going to implement it, but everyone's talking about extending the hours. And it's also good for foreign investors.
Exactly.
It's wonderful
Especially
for foreign
the
investors.
time difference.
For guys that are in Miami that want to buy
So
the
5
stocks,
p.m. is like
come
1
buy.
p.m. US time. or 12.
12,
Instead of-
depending, yeah.
And those guys can even get more active in the market because what used to happen back then, if you were sitting in Miami, you leave your order with your broker.
A day before. You can't change things.
Yeah, you can't
change
change
that.
You can't
Yeah.
add more if you wanted to put more. So I think I really want volume and liquidity in our markets, man. And I really want FPIs to get involved more in our markets. I really want the world to get more involved in our markets. And I want local companies to be encouraged to list because of this. So I'm all up for 24 hours if possible. Weekends.
All right, we're going to go to
Weekends.
buy, sell, or hold in a bit. But Gbenga, I'm not going to let you leave if I don't ask you about, maybe give us some kind of view on Africa in general, especially from a DFI point of view. So how are African countries and African business or African economies doing, performing now, especially with a lot of these cuts that you're seeing from the US. When I mean cuts, I mean cost of funding and all of that. So what's the economic landscape like at the moment? Is it positive as we're seeing in maybe Nigeria and Ghana?
Yes. So, I think to start with, right, to say Africa is a very interesting continent, to be honest. Different dynamics in different countries. Obviously, there's the CFA, there's the cities, then obviously different currencies. But I think those currencies that are linked to the euro, they are more or less stable relative to we that we're not linked to anything. So I think a key theme across Africa, right, that seems to be gaining ground, right, or that seems to be a key topic, right, since this time of COVID has been currency devaluation, right? So that impacted a lot of African countries back then. We've seen, sovereign restructurings. We've seen Ghana. We've seen what happened in Zambia. We've seen talks of that and that, but we've seen those cool off over time, all right? And I think that is positive for Africa. From a resource perspective, Africa is a commodity-rich continent, right? And what we're seeing right now is Africans looking into Africa to develop Africa's resources. We're seeing more of that across Africa right now. We're seeing in terms of licensing, permits, mining conventions being made investor friendly. Right, we are seeing governments opening up. So we're seeing positive vibes, right, across Africa. Inflation, yes, it's normal, right, because we're in a global economy. We're seeing what's happening, but it really, the direction is positive, really, for investing in Africa.
Are there countries that you're saying, these countries look like they're bright spots outside Nigeria?
Well, yes. So we do business across Africa, right? So basically, So a lot of African countries are bright, but you just need to look for the right opportunities, right? So we just in our present investments, right? You don't just use you don't paint all countries with the same brush, right? Yeah. It's on an investment by investment basis. You don't invest because A is bad or B is good, right? You look at the quality of the project, right? And you assess the risk and you fund the project. So that's the way to do projects, really. So you might see a difficult African country, right? You might go in there and see a very good project with very good sponsors. Then you basically look at the risks that are involved. And is it worth going into? Is it worth doing? Then you do it. If it's not, if you can't mitigate those risks, then you probably wait for a better time for that to happen. Yeah. So I think that's the way to look at Africa, really. In terms of demography, Africa has a very young population. Africa honestly is the future. I still believe that. It's been said many years ago. Exactly.
Africa rising and all that.
Africa rising. No.
But are there any major projects that you're seeing across Africa that maybe someone like Arnold might be like, any major projects happening? Because Tunji has been here before. Tunji was here last time and said, go big or go home. So what big projects? Nigeria's own, at least, is the so-called Lagos Calabar Expressway. Okay, so what other big projects are you seeing across Africa?
I wouldn't be specific as to names, right? Yeah. But I would say there are massive resource projects going on across Africa. Yeah, I think that there are massive projects going on across Africa on the resource fronts. I think that is quite important. A lot of renewable energy projects in Africa. Yeah, massive renewable projects going on in Africa as well. So because obviously for example, look at solar, right? Look at our radiation, right? It's natural resources, right? So a lot of power projects going on in Africa as well. Again, we have a very good, I would say, hydro projects going on in Africa as well. Yeah, hydro. And, hydro is relatively cheap versus thermal power plants as well. So you have some of those projects going on across Africa as well. So there are lots of projects going on across Africa, but I say for a fact that the resource projects are actually heating up in Africa, really. It's there in the ground. I'm
seeing that around, like uranium in Niger, Mali. And also something even interesting is happening in Ghana, where a lot of illegal gold trading has been going on for years, right? Massive illegal gold trading. And it happens across the continent. So the Ghanaian government decided to set up a gold board, something called a gold board, like a regulator that actually regulates.
Yeah, it's not mining.
Yeah. And this gold board actually, from liquidity, thanks to liquidity from the central bank, is one of the biggest buyers of gold, right? So you don't have to stress out and there's a gold buyer in Dubai. There's gold. These guys, they give you CDs, so you buy gold in CDs, So and they rather they buy it from you, right? I think they're the number one gold purchasers in the country. So I'm seeing that across continents where these guys are actually regulators, they're forming regulators or regulatory entities to actually get involved in resource. There's some rare earth in Angola. That's also getting interesting. So yeah, just to buttress your point.
All right, fantastic stuff. We've now moved to buy, sell, or hold. Wow, time is gone. Jeez. Always interested in drinks and mics. Of course, if you're just watching for the first time or you just stumbled on this is Drinks and Mics. Every Friday, you can always get new episodes every Friday, 6 p.m. It drops on the Nairametrics channel. And guys, so we moved to the buy, sell, or hold segment, and we have like a minute for each. I'm going to start with you, Arnold. We've talked a lot about what's happening globally and potential rate cuts and what that means for investors. So buy, sell, or hold US equities still going to go up.
Hold. Regardless of what I said. Okay, so I think there might be some upside based on macro, but I'm worried about how much upside is left. So I'll hold. Even if I'll
seeing you're seeing S&P hit record numbers.
Now I think I'll be more specific. Before it was like buy anything. So I think we're going away from the buy anything. We will be going away from the buy anything to actually what makes sense. That's what it is. So that's why I'm a host. I think it needs to be more specific. So if you're going to buy AI, maybe you should look at specific AI that's actually monetizing AI. If you're going to buy commodities, look at guys who have low all-in costs. If you're going to buy retail, if you're going to buy, there's a stock that we like called Carvana, right? So Carvana is a US equity, it's a US stock that sells used cars. There was another stock doing the same thing. I can't remember the name now. That company literally defaulted because of bad loans. The loans went bad. So what these guys do is they give subprime auto loans to people to buy used cars. But now the two companies doing the same thing. One goes bust because the loans they've been giving loans to immigrants, right? And these immigrants getting caught up. But Carvana is still a good stock because it's doing the same, but the loan focus is slightly different. So now it's like, it's not a buy anything market anymore, but it's a buy good stock market. So that's why I'm a hold.
Okay, so for me, I'll say it's a buy, right? And I'll say subject one. Earlier on I said 25% bips cut has been priced into the market. That's what I believe, right? So if as equity investors, right, you take a long-term view, right? So if you think that, there'll be further rate cuts between now and probably mid-2026 or maybe for 18 months, 12 months, then it's a buy. But obviously, I agree with Arnold. A buy is not a blanket buy. I have never had a blanket buy on anything because you also need to look at
it's not a buy sell
buy sell
or rather speculative buy, right? So but you also need to look at the fundamentals of what you want to buy. I think that is I've always been a fundamental person and I remain a fundamental person. Anything I can't explain fundamentally, I don't invest in. So, but I'm not going to go to cryptos. So.
Okay, it's a buy for me as well, though. Okay. And it's a buy. Buy now, though.
Yeah.
Now. Because the thing with buying is that, in markets, everything has got timing. So when we say buy, I mean, like, I would do US equities now.
Okay.
But I think next 2 weeks might be expensive.
Yeah.
Okay.
Yeah.
I understand. Yeah. So this is buy it now.
Buy now for the long term.
Yeah. Buy it now.
All right. So next, of course, is Nigeria. Same thing. Buy, sell, or hold.
Yeah, so me, I'm a buyer.
Because we've sort of seen like a stagnation for
no.
September looks like, market seems like.
That's fine. So listen, I've always said I like
still
the assets.
Nigerian stocks?
Yeah, I think there's more upside.
Nigerian equities?
There's more upside. Yeah. And it's the same thing, right? So we've had this screaming blanket buy where everybody's a genius this year, right? Everything I bought has gone up. Yeah, I'm the greatest investor in the world. But I think we now start going into specific now. So what exactly are you buying? It's the same thing. So and I think Nigerian equities is a buy. Nigerian markets is a buy. I've always said I like the assets. I don't like the currency. I still think we hedge. I still think if you can hedge. I don't think not everybody likes it, but.
Well, I think for once, both of us agree on something.
Yeah.
I'll say buy. For the banks, I think you just need to, obviously, for me, I've not had a blanket buy on anything, to be honest with you, right?
Yeah.
I cannot have a blanket buy on anything.
Yeah.
I need to look at the fundamentals and see what works, right? Yeah, but I'm not going to like say any specific bank, but obviously there's some banks there that are well diversified, right? So I think those banks are good stocks to look at. Yeah.
Last buy, sell, or
Man,
hold.
if you could also leverage, right? Sorry, I was just thinking about this. If you could borrow 35%, would you buy equities with it for 1 year? If the bank gives you a loan at 35%, it's $1 billion.
To buy equity now.
Yeah, 35%. Would you buy equity?
For 1 year, I don't say the 25% return, right?
You don't think so? You don't think you're going to
25% return from current levels.
Yeah,
no.
the problem is not even like whether you see a 25% return. The problem is whether you would see stocks that you can sink that kind of money into.
I'll buy.
That will give you that 35%
I think you
return.
can.
Which
I think Zenith is 120 Naira stock.
Really?
Yeah, 1 year.
35% return on that.
Yeah, I think there's some good
liquidity
stocks
wise
out there,
probably
man.
does.
Yeah,
Probably.
yeah, I
But
think
will
there's
you
some
be
good
able to
stocks.
sell enough on time to give you that return? That's
I
the
don't
problem.
know, just,
Yeah.
I think there's some
All
good
right,
stocks
last
out
buy,
there.
sell, or hold.
All
Exchange rate end of month closing at 1,450.
Is that to me?
Yeah.
You know I'm going to say no. Listen, man, I would die on this hill. Yes, things have improved 100%. Yes, the
1,450 I'm talking about is official rate, by the way, no black market.
yeah, but I still
It's at
I don't.
1,480 now.
So it's just come to a point where maybe I'm so as an investor, I try not to be married to a position, but I feel like there's a part of me that feels like I'm married to a weaker Naira.
Okay.
But out of it, I
All right.
still think that there's some pressures coming in. Okay, yes, we have a weaker USD, but we talked about a pricing in of 25 basis points cut already, right? So I think because that's been priced in, the weaker dollar narrative on a short term is weaker. As in that story and that argument is weaker because
Doesn't hold anymore.
it's already been priced in. So what matters now is the idiosyncratic issues of Nigeria. And I think that we have some big payouts. We have some big OMO maturities coming that some FPIs are going to want their money back. Some are happy to roll over, but you're going to have some redemption because they've made some good money, right? So there's going to be that outflow. We have a $1.2 billion Euro bond maturity in November, and we have another $800 million of coupon payments coming out. I think there's some pressure coming out.
September.
Oh, so end of September.
Yeah.
Oh, that's just down the road now.
It's just like
Exactly.
few
I
days.
got excited.
Exactly.
Yeah,
It's your
it could happen.
Your
Could
berry
happen. I know. Sorry. It could happen. Yeah, it could happen.
Oh gosh, so that's a buy.
It's a hold.
It's a hold.
It's a hold.
Sorry, it's a hold. It's a hold.
It's a hold for
It's
you.
a hold, really.
Oh,
Yeah, it's a
okay.
hold.
Well, I mean, I would like to surprise you guys too. That
Unless you know
say
something that we
that
don't.
it's a sell for me though. I don't think.
So you
I
think
don't
it's not going to happen?
Yeah, it's not. It's not
Really?
Okay.
Yeah, I
Why?
don't think so. I
Okay.
don't think so. I don't even think the CBN would want it to be that strong. I mean, you said it earlier that at the end of the day, 1,450 also means less Naira as well.
It
for
does.
states,
Yeah, it
So
does.
they've got
It
to
does.
find a way to.
They had to find
it.
it.
Yeah.
But you didn't give your view on NPC.
On NPC.
Yeah, NPR next week.
Oh, I did.
You didn't.
Oh, I think they'll cut.
How much?
Yeah, 25
Okay.
bips. Yeah.
Interesting. Okay.
Yeah, that's what I
Yeah,
think.
okay.
Yeah, probably hold other parameters, but 25
But
bips.
those
That's what I
25
think.
bips. Okay.
I think 50 bips might be stretched
Too
for the
aggressive.
CBN.
Let's see,
For the
man.
CBN.
You think they're not?
Yeah, I just think, man.
You think they're
and I
afraid
agree
or
with
they're
Gbenga,
careful?
it's gonna be it's not gonna be unanimous. You're gonna have dissenters.
Makes
Yeah.
sense.
Yeah.
Somewhere, yeah. It's probably gonna be a
Okay.
close one. All right, guys. Just as we were rounding up buy, sell, hold, I just got a lot. I'm sure your phones are probably beeping as well. The Fed just cut rates.
Yes.
Yeah, rates cut by 25 bips. So, what does that do to your permutations, Gbenga? What does this mean?
Well, so I think my view hasn't really changed, right? Because I basically said, 25 to 50, but I also believe that 25 bips has already been priced into the market. I think what has changed right now is that the Fed signaling further cuts, right, before the end of this year.
Yeah.
And we should see that transmit into additional rally in equities and also in bonds as well. So I think it's positive for the market. I think for Nigeria as well, and for Africa, I think it's also good news as well. I think obviously Arnold likes gold a lot, so I'm sure that there'll be a
Arnold
rally.
is happy about this. Arnold, you were
wanted
expecting
50.
50, so you got
No.
25.
So the consensus was 25. So
Yeah.
92% of consensus 25. about 7%, 50. I was in the 7% of 50 because I wanted a nice spike. But I mean, we saw gold go below through $3,700, which is wonderful. I talked about commodities, the super commodity cycle. That 50 would have triggered a nice super commodity cycle.
Yeah.
But you, which is wonderful for the continent, wonderful for us in every single way. So dollar weakness, which is the lowest it's been since
2022. Yeah.
I wanted 50, but 25 is fine. But I also like the signal of further rate cuts as the year ends. That means, in my view, as an investor, whatever positions you're in, which some of us took, you just hold the positions until December.
Yeah.
Jeez. So for anybody who has investment in US equities, you probably want to check your portfolio right now, man.
Crypto's
because assets are going to be flying.
Yeah.
Flying. Also a risky period to invest, but I mean, if you've taken positions already, this is good for you.
Sure.
All right, guys, this has been Drinks and Mics brought to you by Nairametrics. It's been another amazing episode. And bye, Seller Hold Gbenga.
Oh, bye.
Amazing stuff here. And cheers to you, man.
Cheers.
Cheers to your water.
What did you just buy?
We just voted
you.
We voted you in.
All right, so of course, we do this every time. And thanks to our partners, Lead Drop and Swan as well for being a part of this show. Tunji is going to be back next week. And of course, next week when we come back, we're going to be talking about NPR decisions. We're going to be dimensioning it as usual. Please, we have winners, by the way, for our book. I think we had a winner last week. So that winner's name is going to be pinned on the comment section of the show, and we're going to get in touch with you so that they can tell you how you can get a copy of this book.
Making it big.
Yeah.
Making it big.
Making it big, in case you want to make it big. So you're going to get a copy of this book for free. All right, this has been Drinks and Mike brought to you by Nairametrics. Until we do this again next week, do have a profitable week ahead. Bye.